Yo, yo, what's up, guys? What's up? I hope everybody is good. Uh, testing. What? I'm joking. Anyways, so I've kind of decided to do something a little bit different in this video. Hopefully, maybe you guys like it. But I'm gonna do an overview of this week's trading setups that I had taken, and also the overview of the account. So yeah, let's just jump right into it. So, as you know, this is our gold funded 5K account, and I'm just going over the literally the full history of the account. So this is literally all the trades that I have taken so far on this account, and as you can see, we are down 24, well 28 or 24. I don't understand what's going on there, but we're just down. Let's say we're down $30 on the account as we speak. We took two trades, three on Friday. This was Friday. Let me see the date. Oh nine. Yeah. I mean on Thursday. Sorry, this was 09 Thursday on my mobile device. These are all on the mobile devices. Like when I take my setups, I take them my trades on the mobile device, and this was our last. So yeah, as you can see, we always have high wins and small losses. This is what keeps me in the game most of the time. I have huge wins, small losses. Typically, sometimes my small losses are due to impatience and kind of uh, under analyzing my setups. But anyways, so yeah, that's what I wanted to show you guys in regards to where we are. I'm just gonna go through basically the gold trades that I had for this week because I only traded gold this week. Um, I didn't really pay any interest to the other pairs. So you guys will get to see at least how I break down the markets and what my strategy is all about. So coming into Monday, because yeah, it was Monday. I think my network is tripping. Yeah, anyways, coming into Monday, right? Monday was here. We saw markets having a daily fair value gap down here. So on our highest time frame, right, we have a bullish daily fair value gap. That's the most recent fair value gap that I'm interested in. Coming off of the fact that we have swept these lows, we are most likely anticipating that gold could potentially continue buying. However, we shouldn't be ignorant to the fact that we have been on a massive downtrend and we do not want to force the reversal. So don't force anything when it comes to your trading analysis and everything. But as we go further into our time frames, further down into our time frames now, on Monday, on Monday we had this setup over here. So this setup on Monday, uh, so the 4 hours, yeah. So this setup on Monday had this 4 hour fair value gap, but unfortunately we didn't get a tag into this the whole day. So as you guys know, I only analyze on the daily and the 4 hour for my market direction. So I didn't get anything on Monday. Then Tuesday in the morning, markets tapped into this 4 hour fair value gap at like literally in the morning at 12 a.m. and delivered to the daily fair value gap where I wake up at 8 to start trading. So I went down to my 1 hour and I looked for long positions from that 1 hour entry. However, I did also have uh, a sell setup actually at that time. Let me open this again so you guys can see. Because at that time I also did have a sell setup. I did take shorts from this 4 hour. It was a bit out of the time that I usually take some shorts, but nonetheless I did end up having some shorts uh, from this 4 hour delivering to these lows, and then I also had a buy position here. So I just want to open up my meter trader so I can show you guys because I'm not too sure I think I entered it on the 5 minute. However, I'm starting to run away from the low time frames. I think I tend to have multiple entries like you guys have seen on my Meter Trader history. I have multiple entries where the 5 minute I have to enter twice. So sometimes like I have to it liquidates more because it's on the lower time frame. You have to understand the lower time frame needs more liquidity than the higher time frames. So if we just go and we mark from here, so from the 9th, because we're just gonna do from yesterday. The other videos have no from supposed to do from the 7th. So from the 7th, we're going to see because Monday was the 7th, man. Uh, yeah. So from here, you know what? Let's do it like this because I'm getting confused. So this there was a yeah. So on our 4 hour here, this is this trade. So you see we had this sell setup. This was at 416. It doesn't give me the days. Oh, but it gave me the profit. Yeah, so this was the profit. It said there 99 dollars. So the $99 would be here. Cool. So from there, okay, I have the information. So this is the history. From here we have the $99. Well, technically, because I had a loss of $20 on the same day. As you can see here at 4 in the morning. Yeah. So we had a $20 loss and then we had a nice $99 TP, which is this setup right here. So it tapped into that and then I caught the shorts. Um I'm pretty sure the shorts were like, oh no, I had it on the 5 minute. I had it on the 5 minute. I had it on the 5 minute. But I want to see something because now I'm gonna start using the 15 minute as my entry criteria. I'm 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 kind of scaling upwards in terms of the time frames. I don't want to be trading on the 5 minute anymore. It gives me too many false signals before it gives me the correct signal. So I'm not too happy trading 5 minute anymore. It does give a nice high risk to reward, but I'd rather have one entry that hits TP than um have to trade twice to get my TP. So here, as we can see, markets swept liquidity. So this is how I would actually anticipate it on the 15 minute now. So I would look at this and I'll be like, okay, we can clearly see a liquidity grab from here. And then from there, we had this short position. Boom, markets closed below there. And then, well, so now if I identify that there's a fair value gap above here that hasn't been mitigated, then I will use this fair value gap. However, this fair value gap was mitigated, or was it? Yeah, yeah, I don't know. This looks like it equal highs of some sort. I don't know what's going on there, but if it was mitigated, then I use this high as the candlestick that closes below my resistance red line, or if I'm buying my support, my blue support line. So this is not the red line. This red line is my indication to show me that okay, we're ready to sell. So I use that candlestick high, and then now I'll be targeting the lows. So you see the risk to reward that it gives me. It gives me a higher risk to reward, and it makes me avoid losing on the 5 minute because I had lost on the 5 minute because I got swept out and then it went lower for me to get those $99. And same story with the fact the with the daily. So I just wait for the pullback into this area and then a close above. Now, the issue that I have when it comes to the 15 minutes is that sometimes I prefer to use the candlestick and other times I want to use the low or the high. So when it comes to the 4 hour, um, I most typically use the candlestick. But when it comes to the daily, because the daily is such a higher time frame, I'm thinking of using the previous low, like just the low of that candlestick. However, I could also just be um more patient and maybe wait for the 1 hour, which is what I did this week. But it eventually did take me out at break even. Unfortunately, it was a break even somewhere here, if I'm not mistaken. Yeah, something like that. So yeah, it was, yeah, there we go. There. So I did take the long to see it was still on the 7th. It was still on that same day, on the 7th. So I took the long position once daily the 1 hour closed above there, and then I was trying to target these highs. So now I'm going to tell you why I went to break even. The reason I went to break even on this trade was because when I went to my higher time frame on the 4 hour, I had seen this huge rejection. So I didn't like how the markets rejected from this internal high. It gave me uh a sense of it might not have enough momentum to continue buying. Considering the fact that we are also still very bearish, I'm not going to start to try and force the buys just yet. A clear break of these highs would most likely then give me the idea of, okay, yeah, we could be buying. But because we're not, I'm going to go to break even, protect myself, and then get stopped out at break even. It's fine. We continue. So that's typically what happened there. And then I did have some other entries. There was another one here on this four hour fair value gap. So yeah, we had another entry that hit TP, beautiful TP. We made, I think it was 200, yeah, 231. That was one of the cleanest setups that I had this week. It was on a Wednesday. Sorry about the network, y'all. It's been tripping lately. Oh gosh, it's been bugging lately. But come on, come on, come on. Really? I hate this. I really hate this. I'm sorry. Oh my gosh. Like, really? Bro, come on, be serious. Okay, my network is not cooperating. Anyways, we're still gonna discuss this 200 and then the 64, 31 and $40 loss that I had yesterday. So yeah, we're just trying to wait for it to function, I guess. I really don't know what's going on. I don't know if it's the network or it's my PC at this point. I mean, my laptop at this point. I'm kind of lost at what's going on. This is rain Wi-Fi, but I mean, it's the 4G, so it may not be too complacent. But what the hell, bro? I think the network just disappeared on its own. Oh my gosh. What the hell? Okay, there we go. Okay, so can we go to our 4 hour now? Oh, wow. Jeez, Louise. Anyways, so coming into Wednesday, as you can see here, this is Wednesday. You see down here, shows it's 8. So we drew this 4 hour fair value gap. So now we've identified that this daily is not the strongest um it's not the strongest fair value gap that we have. Considering we're still in a bearish market, I'm not too keen on using that as my using that as my confirmation for buys as of yet. So now we tapped into the 4 hour and I went to my 5 minute. Now I want to show you the setup that I had on the 5 minute as well. I think it's also so you can understand the reason why I feel like I should just change to the 15 so that I can avoid having to do all um these certain steps because I want to simplify the setup to where it's just very automated and robotic. I can just, once I see what I need to see, it's done. I don't have to wait for 25 different other signals for me to trade. So typically, what would happen on my 5 minute, okay, is that my high that taps into the fair value gap needs to close below the resistance red line for the shorts and then get swept. Once markets get liquidated, it must then close back into the range, right? So that's where I got it here. Boom. So I had entered, right? Used that high. Look at how close it even got to sweeping me out. So I used that high. However, when I entered on this trade, I entered and then I saw markets starting to push up higher and I exited this trade. I was like, wait, let me wait for more confirmation, thinking I needed more confirmation. So I exited the trade. Then what had happened was after exiting that, it I took it out most likely somewhere here. So I lost basically. Then now I saw that it created a fair value gap going higher and it inversed that fair value gap. So once markets inversed this fair value gap, I was then ready to take the shorts again. And then I took the shorts with my stops literally back to where the original stop loss was. So you see, my original stop loss didn't even get hit, but I still lost. And this is why I didn't like the 5 minute because I'm too focused on the fact that it's a small time frame. So at any moment, if it wants to sweep more liquidity before going lower, it can. Like the low time frames are just shit. For me personally, I'm not a scalper, so I don't like them. So eventually, this is the setup I got, and that's why we had this return on investment. Cool. Now let's go to yesterday's setups. So yesterday was just an unlucky day for me. Um, I did I did follow my rules and whatnot. However, so my judgment is that I think markets decided to grab liquidity to the downside here first, and I hadn't necessarily thought about that. You know, I don't really look at that, but I'm thinking that might have been the reason. So, anyways, 4 hour we have our fair value gap, right? So on this 4 hour fair value gap, you know the rules. You know what we need to do. You know where we need to go with this. We drop down to our 5 minute because that's what we were doing in the beginning. So on my 5 minute, I was like, I need to wait for the first tap into the fair value gap to get liquidated. Then same standard procedure. So okay, let's just wait for this. Oh my gosh, let's just wait for my network to cooperate a little bit. Clearly, it doesn't want. Anyways, here we go. So it did, right? So technically, this high should be taken. I should see a liquidity grab of that high before I decide I want to go lower. However, when I was trading, I saw markets created this low and then broke that low. So once markets broke this low, I waited for retest and where did I enter? Let's go to our 5 minute so we can see a bit better. So this was yesterday here. What is going on? Here we go. So on our 5 minute, yeah, we entered here, got stopped out. Okay, so first entry was here, Perfect. Um, so our first entry was roughly somewhere around here, and then we got stopped out of that position. So this was, hold on, something's wrong. Oh no, sorry, I'm reading this wrong. So we got our sweep of liquidity. Then from there, right, we have to still do what? We need to wake up at 8. So 8 o'clock is right here, and we saw that markets have taken this high out, then continued and then closed below here. So I had taken my short position from there, right? Stops above these highs, right? As you can see, this is what stopped me out. And if we go here, you can see that's the candlestick. This is the candlestick that stopped me out of this trade. So that's the reason why I got stopped out there. And then I was like, I think I'm gonna take a re-entry after I see markets sweep this liquidity and close below. Try to re-enter over here. Same fate was met. Got stopped out again from there. So I think I took three. Yeah, I took like three trades because there was another one, and again I tried entering again. So I entered three times, and all of them just hit stop loss every time, and it ended up being a losing day for me on that. So yeah, that was pretty much the week that we had. Not too bad, unfortunately. Didn't get a nice win. However, I feel like if I was waiting on my 15 minute now, let's see if uh I would have had a better result waiting on the 15 minute. So if I had to have waited on the 15 minute for this setup, right? All I needed to do was wake up at 8 o'clock, which would have been here, right? I see that we've tagged into our 4 hour fair value gap, right? Perfect. And then from our 4 hour fair value gap, you see now it's already entering me at the wrong area. I see a closure below here. So I would have only taken one loss yesterday because I would have used this high, and then from there, where's the 4 hour closure? Well, there's no fair value gaps above me, so I'm going to use this high candlestick, and immediately I would have been stopped out and I would have been done. I would have said, okay, cool, no, it's not my trade, because I would have tried to target these lows, and as you can clearly see, markets were going to stop me out. So now I'll be getting high risk to rewards, but if I'm wrong, I get out immediately and then I'm done for the day. But because I was trying to trade on the 5 minute, I ended up having multiple entries. You get me? So it's one of those things you just have to I had to just evolve this setup a little bit and ignore all of that 5 minute noise. Because if you don't, eventually you start having situations where you you get unnecessary trades. If I was to have traded this setup on the 15 minute here, right? Let me just show you guys. Literally, I wouldn't have needed to know this. I wouldn't have cared about the. All I would have cared is, okay, are we tapping into a 4 hour fair value gap? Yes. What time do I start trading? 8 o'clock. Yes. So we've aligned everything. Now, where's our target? Our target is the external lows down here. Check. Markets went above. Then here after 8, what did we do? We closed below that. Perfect. So literally from here, it didn't create a fair value gap or anything. So from there, I used what high? I used the candlestick high that closed below it. Ugh, really? I used the candlestick high, which is this one, that closed below it. And then what do I target? I target my external lows. So you see, that's now a 10R trade that I could have caught just by using the 15 minute, getting one entry a day. You see, so it's something I need to consider. And if I was to use the 15 minute for that daily setup that we were anticipating, it was going to be something like this. with my stops below the low because it's the daily, it's not the 4 hour. And then I was going to still be targeting these highs. And obviously, I'm not going to watch markets climb all the way here and not be at break even. So either way, we're still going to get a break even. You get me? So the setup still has a similar outcome, even though I'm changing the time frame from the 5 to the 15. It still has a similar outcome. However, I really do support, or I really do think that my system will be working better with now the 15-minute entries. So we'll probably see next week how the markets decide to shape up. Um, it's gonna be a nice week ahead of us. I'm hoping, and yeah, I'll catch you guys in the next one. Peace.